What's going on, everybody? Welcome back to That Makes Zero Sense, the podcast. My name is Alex Savanovich. I'm a trader slash investor at Spoonbill Partners, LLC. I manage real risk for a living every single day. I trade stocks, bonds, derivatives, you name it, and I've probably done it. And in today's episode, we're going to talk about a few of the sillier things that I've seen in today's markets. So without further ado, let's jump right on into the episode. First up, I think we got to start with Apple. So Apple this week says we are going to move away from Taiwan Semiconductor for our on-device chips. We're going to move away from TSM and we're going to move into potentially Intel and Samsung. So I don't really want to focus on the reasons why this may be happening. I mean, I could speculate on a few reasons. I think number one, you already saw Apple the past few years start to move some of its manufacturing process out of China and out of Taiwan into India predominantly. And I think a lot of that was because one, they wanted to appease the Trump administration and not be so reliant on China. And number two, I don't think Apple really felt, I don't want to use the word safe, but I don't think they felt like it was an intelligent business decision to keep manufacturing operations in China while there's some potential geopolitical risk stuff brewing on the horizon. Maybe nothing's really happened yet, but there's always that maybe, and there's always tensions between China and the USA. So maybe Apple wants to get out of there for those sorts of reasons. And again, TSM is not based in China, but it's obviously based in Taiwan, which is right next to China. And if China were to invade Taiwan for any reason, that could obviously be a huge headwind to Apple if they're super heavily reliant on TSM. And I think also Samsung wouldn't really tick this box, but I think moving to Intel sort of onshores some of the jobs to America. And that would obviously be a positive in the eyes of the Trump administration. So those are just a few of the reasons why. Again, I don't really want to focus on the reasons why. I sort of want to focus on how silly some of the price action was following these announcements. So the silly thing here is that Intel and Samsung witnessed these massive rips based on solely conjecture, like no deal, there's no contract, no deal's been signed. As at this point, at this stage, these are not revenues, these are not even potential revenues. This is just all hype. It's almost no different than GameStop saying we're going to buy eBay. Like that was news this past week, but GameStop saying they're going to buy eBay and eBay ripping, and the math completely doesn't make sense. GameStop swallowing eBay is like a fish trying to swallow a shark. But eBay ripping on that was obviously euphoria and animal spirits in the market. And this price action, Intel and Samsung following this sort of Apple potentially moving away from TSM, is another example of those animal spirits very present in this marketplace. Now, I would stop there and say that was the dumbest thing that occurred. But if you look at the price action in TSM, now, yes, I just said there's been no contract inked, nothing has been signed, but TSM might lose a lot of its Apple business as a result of this. So, sure, if you're going to rip Intel and rip Samsung on a potential deal, it would make sense that you sell TSM on a potential deal where they lose a lot of Apple business. But no, we sold off for a few hours, I think, on the day that the news was released. And then I want to say a day or two later, TSM recouped all the losses from that news, and it wasn't even like they had a report or some of their own idiosyncratic news that would cause them to retain a bid. It was just this constant, nonstop buying in semis, SOXX, SMH that caused all of these names to slowly but surely, but continue to get bid up. And we weren't trading on any sort of fundamentals. I mean, I wouldn't even say that the Intel, Samsung, Apple, TSM stuff it's not even remotely fundamentals. Like I said, it's all conjecture, and maybe a deal happens and maybe it doesn't. The semis are showing us the most raw version of what animal spirits look like in this marketplace right now. And it's pretty interesting to watch, and it makes completely zero sense. That's why I had to talk about it on this episode of the podcast. So let's move on to our next topic. I want to, while we're on the topic of semis, let's talk about NAND and DRAM, Micron, SanDisk, and some of these memory related stocks and the run-ups that they've experienced, and why the run-ups, I don't want to say mathematically, but mathematically and when you look historically, don't make a whole lot of sense. So I did some back of the envelope calculation. How many dollars in market cap each one of the prominent memory stocks have added since they reported their earnings. So I wrote them down here. Samsung's added $331 billion, Micron $200 billion, SanDisk $51 billion, SK Hynix $204 billion. And obviously, the days since they reported all vary. So Micron's added a lot more than some of the others because they reported 50 days ago. But in total, across these four companies, it's been roughly $760 billion in market cap that have been added. Now, okay, let's pause there for a second and just think about that. $760 billion in market cap have been added to four companies since they reported earnings, ranging from as little as 6 days ago all the way up to 49 days ago. Just to put it into perspective, that market cap is larger than ExxonMobil, biggest blue chip stocks way back in the day. Obviously, it's not anymore. But just to put that into perspective, for businesses whose revenues are very cyclical. Now, we're going to talk about that a little bit later, but just to put it into perspective, $760 billion. So this is where it starts to make zero sense and why we had to put it on the podcast. NAND and DRAM memory have never experienced peak pricing or peak demand in perpetuity, ever. It's just not something that happens in that market. And you could argue that that segment of the semiconductor market, NAND, DRAM, memory, whatever you want to call it, is the most cyclical part of the semiconductor complex. The cycle always goes the same way. Pricing power encourages capacity additions. Capacity will eventually catch up to demand. At some point, we'll catch up to demand. Demand's not going to outstrip supply forever and ever and ever. At some point, the capacity additions, right now, they have unlimited pricing power, of course, because they can't make enough of the stuff to satisfy all the customers. But at some point, we will match demand. And at that point, average sale prices will begin to drop, first slowly, then all of a sudden precipitously, and we will round trip on these names. And they will give back all these market cap additions that they've made. I'll be the first to say it. I don't think they're going to stop at 780 billion. I think we're going to drop a lot more than that once demand reaches the supply. And you start to see some of these ASPs fall off a cliff. If you think about Micron, who added $200 billion in market cap, they've essentially, the back of the envelope calculation is they've added 3.6 times their annualized peak net income. And for SanDisk, it's more like 3.5. So when you buy the stock at these levels, you're essentially being asked that the peak quarter annualized is going to continue forever in perpetuity, which, like I said before, does not happen in a cyclical business like memory. It's never happened before, not in 17, 18, not in 21, and it's certainly not going to be this time. Yes, HBM is a different beast, and there's huge demand for it, and pricing seems to be completely inelastic, i.e. the demand does not change no matter how much you charge. It just seems to be these hyperscalers need the HBM, but at some point, again, remember, pricing is inelastic because we don't have enough capacity to satisfy all the demand. At some point we will, and HBM will not be priced to perfection, and it will not be as inelastic a good as it is today. So I'm super, super, super bearish on memory. I'm sort of bearish to the whole semiconductor thing as a whole, but memory especially, just because of the cyclicality of that business and the way that these things are being priced to perfection right now. Like, we're never going to have another trough in memory again. Just doesn't make sense from a historical standpoint whatsoever. And I feel like that is going to course correct. I just don't know, is it next week, next quarter, or next year? And if it's next year, that's a long time to sit in a short, of course. So topic 3 that I want to discuss today, there's been about $2.5 billion worth of oil shorts placed around Trump's war in Iran announcements this week. The reason why I bring this up is because obviously forever there's been a problem in Congress and in Washington with individuals who sit on certain boards or have access to certain information making trading decisions ahead of major news that comes out of the White House or out of Congress or just out of Washington in general. There's always the running joke that Nancy Pelosi every single year beats Ken Griffin, which should never be the truth, because Kenny Griffin is one of the best to ever do this in this business. And Nancy Pelosi is a lifetime politician. So what does she know that all the rest of us don't? And everyone wants to poke fun at Nancy Pelosi. I would go as far as saying, is there stuff going on within the Trump family or within the Republican side of the aisle? For sure. There's people profiting on this war and that have access to information. And it's the easiest, most obvious trade in the world. We're going to have peace in the Middle East and a ceasefire. Of course you're going to short oil. Or we're going to send the troops back in. Of course you're going to go long oil. There's trades being made on either side of every single announcement, long and short. It's just so obvious what is going on. And I hope I heard today that the SEC is now probing it. The Department of Justice is now probing it, and they're gonna try and find out what happened here. They have to do that because it looks so bad. It looks so sloppy, so gross. It's disgusting. Everyone that I talk to on Wall Street thinks it's disgusting. Most of the people I speak to think that people in Washington shouldn't have the ability to trade. If you want to invest in the market, go buy a passive index fund, ETF, whatever it is, but you should not be able to transact single stocks. No different than if you're an insider and you have privileged information, you're not allowed to share that with your friends so they can profit. If I'm the CEO of a company and I know that I'm going to get this massive contract from Starlink next week, I can't go tell my buddy, hey, go buy my stock. That's completely illegal. Insider trading. I'd go to jail, he'd go to jail, end of story. But because these are politicians, they're not held to the same standard as the rest of us. And so I hope the SEC and the DOJ do something. Unfortunately, I don't really think that they will, but frustrating as all heck to see. And don't we all wish we were flies on the wall listening to the decisions being made in Washington? Because at that point, I'd be one rich fly on the wall. All right, so last week's episode, we talked about a very dumb call. I can't remember the name that we were talking about. Oh, it was SanDisk, whatever. Someone raised their price target to 1100. It was basically already at 1100. Today, we are going to discuss another silly call. I'm not going to call it the firm. I'm not going to call it the analyst, but I will say someone finally upgraded Oracle to buy today. With a $255 price target. And I took the liberty of looking at some price action over the last 6 months to a year on Oracle just to figure out how dumb moving to buy at this point was. So let me fill you in. September 10th, 2025, all-time high of $345.72. Fast forward to April 21st, 2026, 52-week low of $134.57. By the way, he's been sitting neutral this whole time, okay? May 6th, 2026, closed at 194, spot 03, up 44% from the lows. He's still neutral. Watch the stock go up 44%. We're still neutral. May 7th, 2026, we upgrade the stock to buy. Okay, so again, it's not as bad as the SanDisk, but I was just sitting here today being like, God, like what are you doing? What are you doing watching a name move like that? You sit neutral the whole time. It goes like this from, like I said, 345 to the low 134, boom, to a year-to-date high of 194. And you're like, okay, I'm gonna upgrade to buy now. You sat neutral from the peak to trough in a few months and then watched it go all the way back up. It's almost like you forgot about the name and then you just punched it up one day and said, oh shoot, I do cover that stock. I should probably move to a buy. What if it goes to 255 next week? I'm going to look real dumb. Trust me, dude, you already look real dumb. Okay? Don't worry. You don't have to worry about that. It's not as bad as the SanDisk, like I said, but it is still pretty bad. Just want to say this analyst, he's got a 30% hit rate, 30% track record, and if you followed all his calls, your average return would be negative 18%. Not really a hot shot. Anywho, the only point that I'm trying to make here is that you watch the stock go from 52-week lows, rally 44%, and at this point in time where you've got banks trying to offload data center debt, specifically tied to Oracle, you've got OpenAI, in my opinion, sort of struggling. Like we said, they deleted the Sora. They're missing internal revenue targets. Anthropic is really taking off. OpenAI is on shaky footing, and that is the LLM that you're most closely tied to. And the fact that you now have a huge concentration of debt on your balance sheet that did not exist before. Free cash flow is degrading at a rapid rate. There's so many issues with Oracle, and to now move to a buy at what I would argue is a premium valuation based on everything that's going on, and you sat neutral just so you weren't wrong, takes the cake this week on being one of the dumber things I've seen, for sure. So anyway, I don't want to hang up on a negative note like that, so I'm going to finish the episode here and say thank you so much for watching That Makes Zero Sense, the podcast. Like I said before, my name is Alex Ivanovich. I would really appreciate it if you went and liked, subscribed, commented on our YouTube, on my Instagram, and our TikTok. Like I said, thank you so much for watching today. Take care. I hope you have a fantastic Friday and an even better weekend. Catch you on the next one. The content of this podcast is provided for informational and educational purposes only and should not be construed as financial, investment, legal, or tax advice. The views and opinions expressed by the host and any guests are solely their own and do not reflect the views of any employer, firm, or affiliated institution. Any examples or strategies discussed are general in nature and may not be appropriate for your personal circumstances. Always consult a licensed financial advisor or other qualified professional before making any financial decisions. The host and production team assume no liability for any loss or damage resulting from reliance on the information provided in this podcast.